everyone. Welcome to Blockchain Professionals 2020 online. In spite of all the crazy that's happening in the world with this COVID-19 damn virus, we are happy to be here and, try this new thing. I have the awesome Michael Bacina on the call, lawyer extraordinaire. I've got a blank. Lawyer extraordinaire, partner at Piper Alderman, and very much keen on Central Bank Digital Currencies. Hi, Michael.
Hi, Adriana. Thanks so much for having me, and thanks everyone who's tuning in on YouTube. I hope everything's coming through clearly.
I hope so too. We'll find out later, won't we? Okay, so I think you're gonna run some questions and then we're gonna go straight into the presentation. Is that what's happening?
That's right. Those who know me know I'm a big fan of Mentimeter. So for our presentation today, I'm just shared my screen and that should come through. Adriana, can you just confirm that's coming through clearly on the YouTubes?
I can have a look. Just give me
So any of those who are watching from home, this is, I often do this in my presentations to get some data which I can take away and also to give some real-time feedback. There is a 30-second delay, as I understand it, on Adriana and I talking and the YouTube, so that'll be a little bit of a delay in votes coming through. So it might take a little bit longer than normal, but that's all right. I wanted to find out, I always check in on people's level of blockchain knowledge. So I appreciate it'll take a little while to come through, but if you can please, those who've come in, just indicate whether you're in the camp of what's a blockchain, understanding the basics, you're the Goldilocks intermediate option, or you're a CryptoKitty owner. And if there isn't at least 4 or 5 CryptoKitty owners here, many of whom I saw RSVP'd, I'll be very sad because that means they will have jumped out at the last minute. So we'll let that go through without delay. For today, after I get through these questions, I want to talk about central bank digital currencies, what other countries are doing, what Australia is doing. Really exciting news came out overnight, last night, with Nancy Pelosi's draft act in the US stimulus, which many people would have seen spreading across social media today. A gentleman at Forbes broke the story first, and I spent far more time than I would have liked reading that act last night. It's about 1,000 pages long. I did not read the whole thing. I only read the relevant bits which dealt with a digital US dollar and digital wallets which banks would be required to open if they were members of the Federal Reserve. So some potentially really exciting movement coming out of America. The old saying is never let a good crisis go to waste, and we're certainly in the midst of a pretty terrible crisis. I should have said at the start, I hope everybody is safe and well, and hashtag staying home. I'm certainly been working from home and now have my children at home, so if any small people run into the room, that may happen. But I hope everyone's otherwise staying safe. Now, you should be able to, once I've gone past this page to the next page, might even come back to the answers to questions later, otherwise I'll be waiting on a 30-second delay. It should still jump over on your phones.
I'm on the, please wait for the presenter to show the next slide feedback screen. Mike, I think I've lost you. Okay, guys, I think we've lost Mike. I think Mike is frozen in the ethers of the web. The call just dropped. He's back now. I can see you, but I cannot hear you.
Is that okay?
Yeah, we're back. Okay, so I'm gonna press.
We're back. I'm not sure what happened there. Thank you all for your patience with our technical.
Okay, I'm recording this call, so after the fact, I can edit the video and just put the version there. So we did have a couple of replies there from Menti.
Yes. What happened to our connection, Adriana? Did it just drop off?
I was just between you and I. The live stream, supposedly it's still on.
Okay, great. Well, thank you everyone who is watching for your patience here, which is at least 7 people. Excellent. So I wanted to get your knowledge of central bank digital currencies. They've been in the news massively of late. In fact, very early on, there were discussions around a Fed coin, a CAN coin out of the US and Canada years ago as Bitcoin started to take off. And the idea was put that rather than a fully decentralized currency, wouldn't it make sense if central banks got involved and started issuing currency directly? And we'll come to this a little bit later, but the US stimulus bill is actually proposing just that. So it's not a new idea that central banks get involved in issuing digital currencies, but it is a real issue as to what form they'll take. So for those who've heard about them but don't know what they are, the definition ranges from, say, a pure digital money that's centralized, which you might say is exactly the same as your internet banking balance now. That's not physical currency, it's just some numbers on your internet banking, all the way to a fully tokenized form of currency where you could have potentially a kind of Bitcoin, but one that is issued by a central bank and underpinned by their reserves. Adriana, we're getting a little bit of feedback there.
Yeah, I'm trying to fix. Sorry. Okay, sorry.
So we have those two ends of the spectrum. One is pretty much the same as your internet banking, but it's just the numbers on a screen. And that could be behind the scenes working as a blockchain or not, or all the way over to the extreme, use it in DeFi kind of level of a genuine digital dollar that could be taken away and held in a hot wallet or a cold storage wallet by people who are in the know and traded peer-to-peer. There is no one at this point issuing anything on this end of the spectrum. There's a lot of people experimenting around that end of the spectrum. So I hope that assists. Now, I did want to get people's views on what impact they think central bank digital currencies will have before I just go into a quick rundown of the leading countries and what they're doing around CBDCs. I wanted to find out if people thought, and this one has multiple voting, which I'm also trialing, I've never not tried this before, of will CBDCs have no impact at all because the central banks can't do it? Will it drive more adoption of Bitcoin? Will it drive more blockchain adoption? 1984 has arrived, it's just 36 years late. For those who are fans of Orwell, it'll remain at wholesale banking level, or is it something that you actually would use if you had access to it? And that for the last one, let's say that's a pure tether style central bank digital currency, but one that really has US dollars or Australian dollars sitting behind it. Libra, maybe. So we have a nice even distribution from the people who are logging in and working happily with Menti.
Michael, while people are voting, maybe you would like to answer the first question on the chat, which is from Max Magna. He asks, is Michael working on any CBDC projects with any central banks? Are you, Michael?
Oh, unfortunately, as a lawyer, we have this client confidentiality. What I can say is that I have had a number of meetings with government and informal meetings with some members of the Reserve Bank, but no one authorized to go on record of anything. It's something that you would have seen reported in the AFR. So the answer is I'm not allowed to say, but I have appeared to brief the Senate Committee on FinTech and RegTech, specifically on central bank digital currencies. And in fact, during that appearance, if anyone cares to look up Hansard, you can see I got grilled by Senator Andrew Bragg, who's the chairman of the committee specifically on central bank digital currencies. The good senator and Senator Scarr were very interested in why we should have one. And then the Reserve Bank came in a few days later to be questioned on much the same questions as well around why should we have one. So the committee sent me away saying, can you please tell us all of the countries that have it? And of course, sitting there, I couldn't answer that question. So I said, I'll take it on notice and give you a submission. So my supplementary submission to the Senate committee ended up being significantly longer than my original submission, and they're all available on the Treasury website, sorry, not the Treasury website, on the Senate Committee FinTech and RegTech. And there's quite a few of those submissions that have gone into that inquiry that deal with central bank digital currencies and suggest that they should be getting used and there should be experimentation. It's been publicly reported that the Reserve Bank has done a wholesale test. I see there's quite a few votes coming in to say it'll remain at wholesale banking level now, which I think is spot on. Those tests have been reported in the AFR in relation to reconciling the balances between banks in the banking system. And that's to do with the payments, because you've got to remember that the Reserve Bank deals, you've got conceptual differences between the actual issuing of money and then the payment systems that operate between the banks themselves. And that's what is an interesting shift at the US level. So I'm going to leave this one open while I probably go to a larger picture on the screen. But if you're using your phone to log into Menti or you have it in a browser, you probably can just look at this and it won't disappear. But I thought I'd try a word cloud, and we'll come back at the end and see what words people have associated with digital central bank digital currencies as we go through. So if you just take note, if you haven't logged into Menti yet, of that code 501082, and unfortunately, if you're watching a recording, that code will have changed and it won't be available. But right now that will work. So I'm going to jump out of screen sharing and I'll come back into it shortly. Once we go through, there we go. So what I wanted to speak to now was, we have a number of banks which have been looking at whether or not they should issue a CBDC. China's probably the most well-known in the space and the most advanced. And unfortunately, because of the COVID situation, they announced pushing back the release of their digital renminbi further. They were originally planning, I think they had announced and were rumored to be pushing it out late last year, but it's been pushed back a number of times. So that is a CBDC which everyone is expecting to sit at the end of the spectrum, that would give full government traceability, full government control, tracing where money has gone, and really having a very, 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 very tight rein on the use of currency generally, and including what people are buying with it and what people are using it for. So that would cut off the concerns about money laundering, but of course that crucifies privacy. So there's an ongoing debate over the balance between privacy and anti-money laundering, which is never going to end probably ever, but it's just really a question of where do you sit. But China's certainly been rapidly accelerating what they're doing, and the People's Bank of China has filed reportedly more than 80 patents relating to its CBDC plans, and they've had them underway for years. So they're really well advanced. So look to China for the first currency to roll out, and they're planning a retail currency. So they're going to give it to people, put it in their hands and let them use it, and then track it from above. It'll be a bit scary when it no doubt gets integrated into the China credit score system, which goes beyond what we would look at in normal credit systems and deals with things like, are you a good party member? Are you a good neighbor, and things like that, versus we only track in this country and Western countries credit on the financial basis of, have you paid your debts? Now, it is worth noting that the Chinese credit system originally started as a form of dealing with people who haven't paid their debts, but it has morphed from there. So I think those two will be intertwined. Now, also Cambodia announced that they were going to be launching a CBDC this quarter, but it's also been pushed back. So it's known as Project Bakong. And the first trial was in July 2019. So that is a wholesale system that is just between the banking members. So the Phnom Penh Commercial Bank is one of the major participants, and the president of that bank has gone on record and said they're in the final stages of deployment. It's of course taken a bit longer because they wanted to ensure the system was useful, and they've said they'll turn it on as soon as possible. And because it's going to be the wholesale level, there'll be zero possibility of speculation, according to president of the PPC Bank. But they do want to take it down that there will be a wallet system eventually that will enable people to move around between fiat and CBDC, but initially it'll be launched as a wholesale system. Also, Thailand has been on board announcing their proof of concept for a wholesale CBDC. That's called Project Inthanon. It's only targeted at financial institutions and the 8 participating banks at the moment. So they have come out and said, the CM Commercial Bank has said that the project is demonstrating that distributed ledger technology has definitely increased efficiency and reduced risks and reduced overall costs. So it's really interesting to see that for those projects that have moved along, they're already recognizing from a financial perspective the benefits that distributed ledger technology, which they like to refer to not using blockchain language, is bringing to the banking system. So then we move on to France, and whereas the Banque de France announced plans in April last year to test a digital currency, hoping to have it out Q1 this year. Of course, because of coronavirus and whatnot, it has been pushed back. Their plan was to run experiments rapidly and iterate, and then they were going to call for a launch, do a launcher call for projects that could use the currency and see where it would go. So they've been advertising, and I think have now hired a crypto economics analyst who with a solid knowledge of game theory and private and public blockchains, and as some engineers to get the digital bank strategy and blockchain applications for banking moving. So France is a really interesting example to look at in the Western world, and certainly one where they're operating under GDPR, so they're not going to be able to issue a retail central bank digital currency that will be able to have perhaps quite the same level of tracking as the Chinese system will have. You've also got Sweden, where Riksbank has signed up a multinational service company, a little consulting company you might have heard of called Accenture, to pilot test their CBDC. They're calling it an e-krona, and they're going to put that on R3's Corda platform. So R3 is, of course, a consortia aiming at financial services, principally banks, to bring in distributed ledger technology into the back ends. So that's supposed to run till the end of this year. And they're a bit earlier in the piece, and they're looking at just getting the bank's understanding of what they can do with an e-krona advanced, rather than pushing it out too far. But they do want to trial a payment platform so that users can come in and use it without realizing that they're using a CBDC in the background. So it's really a test, I think, of the Corda technology, and that's pretty sound technology from the banking sector. So I suspect that ought to be useful. I think there was a great comment from the Riksbank president who said, we need to get our hands dirty now, and we can try something else later, because if we want to issue it properly, we don't want to have to start from scratch, which is a really important comment for anyone in certainly the Australian space around banking who's thinking about these things. Turkey also was talking about issuing a CBDC, but it's just in newspaper reports and considered to be a bit of a pipe dream at the moment. So very aspirational comments came out where they just said the main objective was to establish a financial sector with a strong institutional structure, et cetera, et cetera, et cetera. But really the detail is what counts. So over to the US, Federal Reserve Governor Lowell Baynard had said quite some time ago that the US wanted to and was working to advance its understanding of CBDCs. During the Libra hearings in Congress and the Senate, there were discussions around monetary sovereignty. And then at a recent payments conference over at Stanford, Governor Brainard said they were collaborating with other central banks to keep understanding the CBDC space. And they recognize the importance of the US dollar globally. And as we've seen in recent times with real economic disruption and financial disruption happening on the markets, the US dollar is still viewed as a massive safe haven for investors. So there's been a big rush to the US dollar, despite huge money printing occurring under the Trump administration right now to deal with the COVID crisis. Time will tell what impact that will have. But that brings me to, well, before I come to the exciting part of the US stimulus bill, I can't leave Canada out. Those who know me know I used to live there, and my wife's Canadian, and I sit on the board of the Canadian Australian Chamber of Commerce. So while the Bank of Canada Deputy Governor, a gentleman called Tim Lane, has said there isn't, in his view, a compelling case for a central bank digital currency, they are building one anyway. The idea was that the Bank of Canada will design it to provide the benefits of cash. So they want it to be safe, easy to access, private, which is really important, and a good store of value, but a digital version that retailers could use. So this is underway, and we understand it's under construction now, but the Bank of Canada has also said they're not planning on launching a retail CBDC unless banknotes keep falling out of favor to the point where Canadians wouldn't have an option to use them. So that's interesting and might be contrasted to recent moves in Australia to ban cash transactions over $10,000 and our rapid movement towards digital money anyway. We are well ahead of Canada in the digital money space. When I was living there a short 15 years ago, I got paid with a check, which was pretty funny because I'd never received a check in payment for a job before, and I had to go and say, what am I supposed to do with this? But Canada and the US still heavily use checks, which is disappointing when you're working in payments and want things to move very quickly. However, so Bank of Canada has said they're going to have a contingency that if banknotes fall out of use, or, and this is really interesting, that having a contingency that if somebody else, they didn't say Libra, but they meant Libra, issues a digital currency which has widespread adoption, they will have the ability to immediately issue a cash-like central bank digital currency. So Canada's another one to watch because they're very open about working on it, but they're saying we're going to hold off and let someone else take the risk on adoption. Then we have Japan, who's also talked about creating a digital yen within 2 to 3 years. So still a fair way away, but there were some suggestions that during the Olympics, there would be digital cash deployed because Japan is an interesting nation in that culturally they still use a lot of paper money. And that's a problem because it's very inefficient. And it was raised as an issue to say during the Olympics, there could be a shortage of banknotes because of the number of people who would come in. Now, unfortunately, or sensibly, depending on your view, the Olympics have been postponed for a year, but that also increases the chance that a digital yen could be used when the Olympics is rescheduled. And that's quite an exciting point. Now, if we move on to the US, so the US stimulus bill, gigantic bill with huge amounts of money in it, came out this week, and Forbes broke the story as I mentioned earlier. So I just want to go through it's really important that they've put some definitions in this act around a digital dollar, a digital wallet, and a really interesting concept of a pass-through digital wallet. So this current act is proposing to define a digital dollar as a balance expressed as a US dollar value, consisting of a digital ledger entry that is recorded as liabilities in the account of any Federal Reserve Bank, or an electronic unit of value redeemable by an eligible financial institution as determined by the Board of Governors of the Federal Reserve System. So their definition of a digital dollar in this act is really broad, could easily encompass a cryptographically secured token, could also encompass the existing internet banking style, you just have a number on a central system. But the really fascinating part is that under this proposed system, every member bank of the Federal Reserve, which is all the banks operating federally in America, would have to offer a digital dollar wallet, which is defined as a wallet or account maintained by a Federal Reserve Bank on behalf of any person, which represents holdings in an electronic device or service that is used to store digital dollars that may be tied to a digital or physical identity. Now, that all sounds very boring until you realize that this digital wallet must be backed by money on deposit with the Federal Reserve. And further, under this proposed act, must be held in a separate entity to the normal bank, which is required to issue them. So that's what changes things a bit.
So does that mean, sorry to interrupt, does that mean that the people will be hosting the wallets directly with the Reserve Bank?
Well, that's what I was getting to, Adriana. That means that the Federal Reserve will be backing the wallets, but they'll be getting de facto a bank account with the Federal Reserve, but they'll be still dealing with their bank. You might think about it this way. If you have gas connected to your house in Australia, you're only really buying it from 1 or 2 wholesalers who provide the entire gas network, but then there's about 10 different gas retailers who sit on top and operate marketing and accounting functions to charge you for your gas. But it's really the underlying gas provider who has the pipes. When you change from one provider to another, it's still coming out the same pipe. So that's what's really interesting about this. So by saying that it needs to be in a separate entity, the bank who offers normal accounts, and if you have $100 in there, for those who don't like fractional reserve banking, for example, if there's $100 in your bank account, that just means the bank owes you $100. Under this proposed Fed account, the member bank would have to offer it. It cannot have any fees. It must pay Federal Reserve interest rate, so it's mirroring through the exact same features that the Federal Reserve deposit has, and it must be prominently branded as a Fed account. So, and it can't be within the normal entity the bank operates. So it's a completely separate banking system in a way, and it's completely backed all the way. And the bank can't use it, to my reading of this act, in a fractional reserve system because they have to maintain the $100 you put into this account on deposit with the Federal Reserve all the way up the line. What's interesting is the Act also allows credit unions and state banks who are not members of the Federal Reserve System to open a pass-through digital wallet with a member bank and then in turn offer these digital wallets through. It doesn't require them on my reading to offer them, but it says the state banks can do this with the federal member banks. This of course raises the question of, well, who's going to pay for this? If this is a fee-free account with Federal Reserve interest rates, which are nothing at the moment, so there's nothing there, but it's also fee-free. And the answer is the Federal Reserve under this Act is going to pay to reimburse the banks for the quote, actual and reasonable operating costs of running the Fed accounts. So for an administration which prides itself on being free market, this is a very government-controlled banking offering. And it's interesting because many of the other CBDCs have not gone to this level of detail of how is it going to actually work. And this Act spells it all out and is ready to go, and in fact is going to be voted on if it hasn't already. So it may go through as an omnibus, because last we heard there was only a few issues that were being finalized in this stimulus bill. And this is part of the large omnibus of bills that is trillions of dollars of stimulus for the US economy. So I'm not sure these digital dollar points are necessarily being debated too much, but they are being championed as a way for the US government to get money into the hands of consumers quickly, because a bank who has to set this up, and as I mentioned before, all of the member banks in the Federal Reserve System have to offer this. They don't have a choice. That means people will be able to open this account in theory over their internet banking. That account will be owned by a separate entity of that Federal Reserve member bank. And any funds that are then put into that account, the starting point will be the money put by the US government, federal government stimulus will be there and backed all the way through at the Federal Reserve. Now, of course, once someone withdraws that money, it doesn't have to be part of the Federal Reserve deposit, and that member bank would move that cash over into their funds for lending and whatnot, and they'll have to deal with their capital reserves as they normally do. But it also creates the interesting question of, well, could people rush to these accounts because they're backed all the way out of the normal accounts, which could cause a real problem bank run style? That concern was raised by an Australian Reserve Bank governor in a recent interview to say, we're not sure if we want to have something like Libra or a central bank digital currency in case people rush to it as a safe haven asset and cause a run on the banks. I suspect if that happens, Congress would quickly move to put a limit on the balance that could be held in that account, for example. It also enables what is another, a good friend of mine, Rob Morris, described as the mother of all airdrops to occur, to say, so the US government may set up all these digital wallets and then just airdrop money into them for people. But that's really important, because when the government wants to drop stimulus, it takes time to go through the payment systems. When the Rudd government did its checks, there were all kinds of criticisms over checks being sent to dead people and whether or not they were properly resistant to fraud. So a truly digital system operating in this way could be a savior to an economy by getting money there faster. And at a time like this, when spending has fallen off a cliff and people are on the breadline, getting money into their hands now instead of a day or 2 days later is really important. So the humanitarian need can be met quickly by something like this, as long as people have an internet connection, but also people can walk into a bank branch and open these up. But also by having them connected to an identity that will get around the Rudd government problems of just sending checks to people who are on the electoral roll, for example, or people who are on the records of the ATO. So it fixes quite a few problems. And I think that this Act alone will have all of the central banks who are looking at digital currencies examining it closely to say, how could we do this here? And by putting it underneath a subsidiary entity, it dodges a lot of the problems that the banks may have raised before of saying, well, how are we going to deal with this? Now, it's not a true this end of the spectrum digital currency in that it's not a Bitcoin replacement. It's not a peer-to-peer token. It could be, but initially I think it's going to work so that people will be able to use it to get cash out. But much as the internet started with universities connecting and large organizations using it for wholesale transfers of data and emails, so in my view, central bank digital currencies will start that way while the banks get comfortable with it. This movement in America could just mean that all the Federal Reserve member banks are required by law to get comfortable with it, so they'll have to. So problems will get ironed out. It may be that this could beat the Chinese. Sorry, Adriana, did you have a question?
We have a few questions from the chat, but I have a question first. So How would this impact the way banks lend money to, consumers, as in mortgages and other types of banking products?
Well, in the US, it shouldn't matter so much in terms of mortgages because they have an interesting system where there's a government, Fannie Mae and Freddie Mac, two government-owned companies which underwrite and basically act as a guarantor on a lot of mortgage loans. So it is a problem if it becomes a place where people rush to have safety. But in another way, it's a disintermediation of banking to say, well, if the Federal Reserve or a reserve bank issues currency, why can't you have a bank account with them? And the traditional answer has always been because we don't want the Federal Reserve or reserve banks to be giving people retail level accounts. That's not what it's set up for, but it was set up at a time where you had to have retail banks running. So it could be a really interesting way of saying this is a new system. Loans are different, but if it does move to a full tokenized retail CBDC, there's really interesting experiments happening in the DeFi world where you can lock up cryptocurrencies and borrow against them in smart contracts, and that is the blow your mind, really exciting stuff that can come out of this, which a lot of people are hoping that the first step of having banks having to have these wallets will then transition later to being able to pull out, for example, a true digital AUD or a true US dollar into a wallet that you maintain properly, so you have full sovereignty over that money. It is a digital cash, and if you control it, no one can take it away, and then use it in really interesting ways. But you're right, one fundamental issue around and even cryptocurrencies is our system works on a lot of fractional reserve banking, and it works on a lot of loans being created, secured against assets, sometimes over collateralized, many times under collateralized in the real world. And a lot of the stuff we've seen in the crypto world, particularly MakerDAO is a good example, has been wildly over collateralized positions in order to protect a stable coin and make it work. Whereas nowhere in the real financial world would you find someone wanting 3 times collateralization to give you a loan of something in order to preserve its value. That just wouldn't happen. It's usually more the case that you can borrow up to a far higher percentage of what you're posting as collateral. So I think that it could change everything to do with loans, but when you have that backing of the government guaranteeing a lot of mortgage loans, I think that it might impact the flow of money that could be available. But if all that money is on deposit with the Federal Reserve, it may just mean that the Federal Reserve then starts lending money to banks to on-lend to customers. So in some way, it could end up being an incredibly centralization of power to the Federal Reserve banks around a digital currency. But that only changes, I suppose, to move the power that currently sits with your bank and ensuring that all their records are correct and reconciled, and there hasn't been a bank error not in your favor, to steal from paraphrase Monopoly, that causes you a problem. So I think that it'll have some impact. We don't know exactly what it'll be, but it could be restrictive to banks. It could mean that banks need to start offering more attractive interest rates than the Reserve Bank rates, because if there's an account where you can get the cash rate from the RBA or the Federal Reserve, why would you put your money somewhere else? And we've seen, Zinja was wildly successful by offering, a couple of percent interest rates when everybody else was offering nothing, and had to in fact stop taking deposits because it was so popular due to the banking requirements, because they haven't started lending money yet. So I think banks will still be able to offer people interest to take in deposits and sell bonds in order to raise money to do lending. But it may mean that this sits on the side as a competing form of account for that, or we might end up with really interesting things where you could post some of this as collateral in some way for transactions and really enable some amazing smart contracts. But that part, I think, is still not, I wouldn't say a pipe dream, but certainly I think a few years off really going live in a major way. I think we'll see a smaller country like the Eastern Caribbean digital currencies trying to be more peer-to-peer before we see someone like the US go to that degree. But things like open banking and consumer data rights are only increasing our power over our information and control of our particularly banking records. So it's in the same theme of open banking to say, well, why can't we have something that we can pull out as digital cash and keep as digital cash? There's a real question as to whether or not it just encourages more people to be exposed to Bitcoin and other cryptocurrencies, and whether they can maintain.
From the chat as well. So Tim Lee is asking, where do CBDCs leave Bitcoin and cryptocurrencies? And will central bankers realistically make it illegal to hold them as they represent digital cash and very hard to tax and have KYC and etc.?
Well, just to answer first of all, hello, Tim. Thank you very much for the question. I hope you're staying safe and well. To answer the last question first, Malcolm Turnbull said when he was briefly Prime Minister, he would be very happy to have a digital Australian dollar if it had KYC and anti-money laundering and counter-terrorism financing checks baked into it. So there's an inherent tension that government wants China-level surveillance of a digital currency so that they can say, we created a system and we know it cannot be used for anything malicious. But the counter problem, of course, is who says what's something malicious or illegal? The government does, and people don't tend not to like the interference in their privacy and people spying on what they spend. But I always say that convenience trumps all, and that's certainly true. We have lots of people bagging Facebook and social media, and they're all on there, often using the platforms to criticize the social media itself about its privacy collection practices and other things. And that's a problem for people who value privacy, because most people will hand away their privacy, as was seen in the Cambridge Analytica scandal. The people whose privacy was handed over was literally here, have a fun app and tick a box that says you give us all your information, and no one cared.
And their friends.
And their friends, but they ticked the box and they did it. And it was only really a technical breach that got Cambridge Analytica into trouble. If they hadn't hoovered up all the information about the friends, the people who actually downloaded the app, opted into the app, had completely authorized the use of their data. But that friend data was where they got into trouble. So I think that people won't care if something is convenient enough to use, and Bitcoin and others have a usability problem, which is slowly being overcome with better UX. So I think whoever wins the convenience arms race will win. The problem that Bitcoin and other cryptocurrencies have is that if the ANZ and Macquarie Bank and National Australia Bank and Westpac suddenly introduce a digital wallet within their system, much as Facebook have their WhatsApp and other ecosystems to introduce a Libra wallet, the banks already have people thinking about payments, and I find it far easier to introduce a wallet that people will then use because they know the interface, it's familiar. So that's a problem. That will challenge the use of cryptocurrencies, I think, unless people get really, really concerned about privacy. But the real point will be whether or not people value that peer-to-peer digital cash enough to want to be able to pull it outside the financial system and hold it in a true digital cash form, and whether the government will be happy about that, because it will be easy to see a CBDC which has a baked-in whitelisting wallet control, much as most tokenized funds and security token offerings use an investor whitelist approach. It'd be very easy to see a bank, and even under the US example, to say, okay, we'll use some token system to do this, but the token will have its own built-in switch to refuse to transfer to a wallet which isn't whitelisted. It's very difficult to see how that wouldn't happen, because it's so easy for a government to do and they have so many justifications, and that immediately gives them control over de-whitelisting wallets. And again, we run straight into that same problem of, okay, well, what can the government do to control things? But also, let's not forget that right now, if the government wants, they can shut down your bank account or have your bank account frozen. The courts can make orders to freeze things. So the very tools we use now to combat crime and deal with disputes in the courts can be applied faster to a digital world, and they probably will be. So it may be the case that we look around in 10 years and go, well, nothing really changed, except things around money got a whole lot more convenient for most people. And we managed to shut out a bunch of criminals who've been forced into using ways that are outside the system. And also there's a bunch of people who are very privacy centric who also stay outside that system because they don't like their personal information being given up, but that just marginalizes them. So I think there is a risk that crypto could stay as a niche financial instrument or a niche currency in the various forms, because it also seems to have stalled there anyway. But I think that if crypto systems can give people the UX they need, and people will be comfortable hosting hot wallets, and now that they can get insurance, that's helping there, to give people a really, really nice experience so that they're happy to use it, then people might say, well, why would I change over to something where there is that level of control when I've got something that doesn't have that level of control and is just as convenient to use? I hope that answered your question, Tim. Adriana, was there another question?
There is. JT Walchuk asks, if the US government was to airdrop money into people's wallets, wouldn't the banks in the US especially object to this loss of business?
Well, the answer is they might, but under this act as it's drafted, they don't have a choice. But I'm not sure it may not be a loss of business, because someone who goes into a bank and opens up this Fed account, assuming it's deployed, they're going to need other services. You got to remember that most banks, if you have a transaction account with the bank loses money on your transaction account. They make money on your mortgage. They make money on your credit card. They make money on loans. They do not make money on deposits. Deposits are an expense which banks have, and in many cases have to offer, because the people who open a mortgage with the bank expect to have a transaction account as well. So I don't see, banks may not view it as a threat. They may view it as an opportunity to get out there and say, here is this amazing product that you can have. And by the way, here's our other products, because it may not take long to say, you're earning 0% interest in your Fed account. How would you like 0.5% interest if you jump over to your JP Morgan account? And then people say, sure, and click a button to move over and get a little bit more yield on their balance that's otherwise sitting there. But what's also really interesting is that out of the box, it would give the Fed a huge amount of insight because of the balances as to where the money's gone. Are people spending that money? Are they hoarding it? And in some cases, it may even tie into where is it being spent, which I think that there isn't a lot of insight to. And I think that true digital money has another massive benefit that's very overlooked, in that done properly with anonymity around it, you can still get huge aggregate information out from the economy to find out what's happening. Right now, with all of the trouble that's going on, a huge measure of what's been going on in the economy is literally the lines outside Service Australia, or Centrelink as it used to be called, or in Canada, people turning up for unemployment insurance. But the government doesn't have insight into the levels of actual spending. Even out of China, the measures checked are, the purchasing price index for industry, and assessing purchases of coal as a proxy of economic activity. It's an economist's dream to be able to say, let's look at the real spending that's happening. And economists don't need to have that granular level of, did Mike buy 2 coffees this morning, versus being able to say, oh, are coffees up or down as an item of spending in Sydney today, because coffee is a discretionary expense that drops off very quickly when there's an economic downturn. So there's these really interesting little signals that currently the government of many countries can't get, but they would be able to get under a CBDC, even one that has privacy, as long as it still permits aggregate data to go up. But I do think the privacy thing is just going to be really vexed. Are there more questions we have, Adriana?
No, we don't have any questions on the chat, but I do have one observation that might lead to a question. Do you think that a positive outcome of this could be that then the banks will have to behave better, not sell crappy mortgages to people who can pay them and things like that?
Sadly, no. I don't think anything in a central bank digital currency per se is going to, at least as being proposed in America, is going to help off the bat. Because remember, lending is something that it's not a backed product, as it were. You can borrow money from anyone, and the bank can say, we'll lend you money. That's more about looking at the capabilities of someone to pay back money. And there, of course, is those 2 schools of thought of, oh, the bank has done the wrong thing by encouraging people to borrow money. And there's these people should have known that they could never pay this money back and should have paid more attention. But if there is oversight within a system, then, it's, if you're really sort of pie in the sky dreaming to say, well, you could have, if your loan is being run out of a smart contract, then it's more monitorable to say, well, how many loans are happening? But there is already oversight on things like mortgages in the US, where they saw this blow up of bad mortgages. And I think The Big Short was that movie which showed some of the guys who were shorting the whole mortgage system going down to Florida and seeing for themselves just who was borrowing money and who was not being able to pay, to really get behind the data that was coming out. But anything that improves data can be useful, because data is just like oil. It can be, well, not as valuable as it used to be, but it can also catch fire and burn you if you don't treat it right. So I think that anything that increases the amount of useful data which could be used to help manage the economy better and intervene faster, because most things the government does to intervene when there's a problem, speed is of the essence, as I mentioned earlier. Getting these stimulus bill past the US Congress and getting the cash flowing to these millions of people who are suddenly stood down and wondering how they're going to pay their rent is critical. So that's, in many cases, I think, a more important issue than saying, are banks behaving badly by lending? That can be dealt with through other means, because there's a bit of a lag to when they then go to enforce. And there's a lot of requirements already around hardship notices and other things that borrowers can do if they're in trouble. And there's already a wealth of insolvency law. I used to practice in that space around when people can't afford to pay their debts and how they can deal with them, and try and have discounts or other steps to get through. And we've had a bunch of amendments in recent years, and then some very significant amendments on Sunday to the Australian insolvency system to really relax the entire system to help businesses in these difficult times. But the short answer is no, it doesn't help by itself banks behave better, but it may help them feel that they're being watched a bit more. And while citizens may not like being watched from a privacy perspective, it certainly doesn't help if you have a bank who feels like they're being watched. That certainly may help them behave better, because a lot of the ways I think that mortgages were written badly were when the incentives were lined up incorrectly, and then no one was watching, so people could dial up what they were doing and make more money doing things that were a little bit questionable, and then it all implodes.
That makes sense. I have one question from Chloe. Here we go. It's a comment. An alternative theory I've heard is that CBDC could act as a gateway crypto and increase curiosity and comfort in experimenting with cryptos like Bitcoin.
The gateway drug argument. Yes, I think that is something that has been raised, and it's certainly I think something that's worth thinking about. Is that a lot of people have said, well, if people will come into the CBDC world, then they will move on and experiment in these other more purely decentralized ways. So it could be that journey to say, we're expanding just like the internet, we're doing this wholesale level, and then we're getting through to having things that are at more retail level, and then finally saying, okay, well, why can't we do this peer-to-peer? I mean, my argument has often been, you look at the cash register of a store, and it has Reserve Bank money in the cash register. And you look at the EFTPOS machine next to that cash register, that's just filled with bank zeros and ones. Why shouldn't it be filled with Reserve Bank issued currency or other cryptocurrencies? Why not? They're just cryptographically secured tokens, which provably can't be copied. So they have, in many respects, better properties than the physical notes that are issued, because you just can't counterfeit them no matter how hard you try, whereas you can still do that with physical currency. So it may very well act as a gateway to more serious exploration of fully decentralized systems. I think we're going to need to look to the smaller island nations who are more willing to experiment around that. Loretta Joseph's doing a lot of interesting work with some of these smaller jurisdictions to say, well, why don't we try it? Because I think in a small jurisdiction, it can work better, because you've just got this limited economy, you can deal with it. If it doesn't work, it's much easier to put the genie in the bottle, versus even a country like Australia, that it's a lot harder to do that because you need a lot more cooperation. Now, I'm having some difficulty figuring out how to make my screen sharing work again. Hang on, here we are. I was just going to share our word cloud, which had come up so that people could see. Control and surveillance have jumped up as some major concerns, and I'm not surprised. Obviously, things like stablecoin and programmable money are the really exciting part. And also, I think whoever popped fintech in there, having the ability for fintechs and regtechs to access a proper tokenized digital currency is extraordinary. The things that could be done that we haven't even thought of. I mean, I follow the whole DeFi world and look at some of the amazing things that are happening there, and almost, wish that we could be doing them with real money, because it could just create efficiencies that are out of this world. So it'll be really interesting to see where we go with these CBDC experiments. And I suspect we'll see a little bit of experiment. I think Chloe's right, that the gateway analogy, once people are comfortable with it, is important, because a huge issue, and in fact, it came up during my Senate testimony, was how do we educate people to understand this? Because if they don't understand it, they don't want to do it. And that's a huge problem amongst central banks and banks generally. R3's done a tremendous job of getting out there. IBM, own a lot of the enterprise blockchain space because they're just so huge. But getting people to understand these systems and how they work means that they can then understand some other alternatives and say, look at this very interesting stuff happening in the purely peer-to-peer world, which is still very unregulated and in many cases on DeFi probably illegal, which I have some debates to continue to have with people over levels of legality in that area. But once we could start using a real coin in there instead of Tether, for example, or even a DAI, which had some real challenges around the recent issues that happened there with the price falls, you get away from all of these secondary level problems that have plagued a lot of cryptocurrency around volatility and around ensuring that you have these supplies and other people playing other roles to keep the value there. And while those are really fascinating solutions have come out of that, they have made to lay people crypto insanely complicated, to be like, wow, this is just too complicated for me. I don't want to touch it. And I think that creates a problem of adoption. So a CBDC could also be like a baby version of peer-to-peer money. So I think there is room in the future. I mean, it also means that Forex, as we understand it, won't exist, because if you waltz into there's many countries that use US dollars right now. I remember many years ago when I worked in a bookshop in downtown Sydney in the Dimmix building, someone came in and said, can I pay for this with US dollars? And we joked and said, sure, if you pay the face value of Australian dollars in US dollars. And the guy was like, no way, that's twice as much. I'll go find a money changer. But why shouldn't he have been able to say, here's my digital US dollars, which can be flipped immediately through a point of sale system off a card or using a phone system in the same way that Bitcoin is used to pay for something. Just saying, here's what the Australian dollar price is, and saying you can pay for it in multiple different currencies or different methods is really useful. I mean, if you want to have, it's very difficult to just go and buy US dollars now and then have them available for spending. But flattening that curve out could be very interesting for businesses as well, because they can manage their Forex holdings in completely different ways that they do now. They're not looking at forward contracts and things like that. They're just buying it and then have it. And it's nice and simple. So anything that brings simplicity will bring convenience, and convenience is king. So I think crypto's got to work hard on making, and the blockchain space has to work hard on getting that convenience and UX right. CBDCs will have a big leg up competing, but also could be complementary. And if they work in a way that can interface with smart contracts, then they're very complementary, because that would require them to have the ability to sit there and perhaps not be as easily frozen, because you'll need to have an actual point of transfer of title that needs to be managed under a smart contract, which is a completely different webinar that we might do another day about how that could actually work in a smart contract context under code. We're not going to get there yet. I think it will happen eventually. But I think at the space, which has been massively interrupted but was getting very hot around COVID-19, is going to, as we see the recovery start to come underway, fingers crossed sooner rather than later, I think this will pick up. And in particular, the Senate committee, who unfortunately, Senator Scarr, I think also is positive now. Senator Bragg was after attending that wedding. The committee itself has been hit hard by coronavirus. I think they're going to have some very interesting things to say in their final report to Parliament, and which may in fact end up being extended. But also I think moving on from there, it wouldn't surprise me if the Reserve Bank continues to experiment and perhaps even looks at what's happening around the world and says, well, we need to get in and talk to some other central banks about what's happening as well. Historically, Australia has been a fast follower in many cases with technology, and we've certainly taken a lot of payment stuff out of Southeast Asian countries that got there before us, but used it to leapfrog North American banking to have us in that position where we could walk in there 15 years ago and we'll say, what's wrong with you guys? Why are you still using checks? And walk into some places now and say, my gosh, you're still using checks. And I will say that even that, for all the revolutionary stuff in the US stimulus bill, it still says the stimulus money can be paid to someone who has this account or paid by a check. So they're not giving up their checks anytime soon. But I think that it's a space that we'll look back a year from now. And in fact, Adriana, I'll invite you that we'll do a year check-in from now just to see what's happened in the space as well. But I think there'll be a huge amount of traction happening. And it might even be that as the recovery comes through, it's used as an opportunity to drive this kind of efficiency and changeover. Were there any other questions that had come through that
there's a question from Mohammed Naqib. He asked, actually, Mr. Cherry Sunburst, what's the time frame on this bill going forward? I think it might be the US bill.
Well, it was so hot off the presses that the US Congress site didn't even have the text of it last night. I had to get the text off. National Public Radio was hosting it because they got hold of a copy that hadn't been signed yet. So that was being debated. So after this webinar, I'll be checking in to see where it is at, but they are rushing this stimulus through as hard as they can, in the same way that the Australian government pushed our stimulus measures through and have been pushing through a range of bills. It's incredible how hard our public servants and parliamentary drafting office have been working over the last couple of weeks, because it is not fast to have to go in and write in English, sadly not codified or in any kind of API form yet, but those kinds of amendments, they take time. This bill is 1,000 pages. Some small army of the US bill's 1,000 pages. Some small army of people have been working on that nonstop for days to get it and negotiate changes and get them through. And as someone who's worked on vastly shorter contracts knows, even when you're trying to do a deal on something that's only 100 pages and you're negotiating the clauses of that, simply getting it updated and changing it and reprinting things or even printing the PDF takes a lot of time. So I'm hopeful they're going to get this bill through today or tomorrow. Certainly President Trump does not want to wait in getting the stimulus through. They need that money in people's hands now so that they can spend it and get liquidity moving in the economy. Otherwise, it's going to get even tighter, and what has started as a major health crisis is going to go into even more unknown areas. My personal view is that the government should just declare we're on a wartime footing and that normal rules just do not apply. And I've seen a number of people have already been saying, based on the statistics and unemployment rate and other things, normal rules can't apply because even the definition of unemployment is someone actively looking for a job. You can't actively look for a job if you're in lockdown. So you can't technically be unemployed, but you still need to figure out how many people are going to be looking for work.
You can't look for a job if it's a remote job, but there's only so
true.
many of those that's going to be available, right?
Well, that's right. So but that means you'll still have all the people who, particularly trades, who have to go out and work. And if there's a lockdown where they can't do their work, they will technically not be counted in unemployment. So definitions are breaking down for how we've done things before. Hence why I think we just have to treat it as wartime footing until we go back to normal, and then we can push a reset button on a lot of these things and say, all right, we're through. And there's a lot of challenges. You know, I think, I'm not sure in my exact timing, but I assume I've run close to the end of my allotted time. But, you know, in closing, I wanted to, I suppose, also just say that there's a huge amount of challenges out there at the moment, but there's so much opportunity as well. I see as a lawyer two basic kinds of clients now: ones who are cutting back and saying we've got to make what we have last as much as we can, and others who are saying, my goodness, this is once in a lifetime opportunity to get out there and do things. And that's a really interesting thing to see, because lawyers were always conservative. So it always fills me with, I suppose, happiness and joy to see clients who are saying, what are you talking about, Mike? This market going down is phenomenal. There's so many amazing opportunities that we could never have afforded to do if things hadn't gone down like this. This is something where we think we can come out of it stronger than ever before, or other people saying, look at these new ways we can help people and harness the social good that comes out of people wanting to help each other. So I suppose I want to end on a positive note. I think that on balance, CBDCs are going to be really positive in the future. If it can be part of our recovery from Corona going forward, great. As always, if you have questions or anything else, you can find me on the LinkedIns. I almost joked at the start, Adriana, when you said, I have no words. I think I was introduced once down in Melbourne at a meetup where someone just walked out and said, hey, this is Mike. You know him from the LinkedIns, and handed the microphone over. Always happy to get questions shot through. Usually I say I'm happy to have a coffee, but I am definitely endorsing the stay at home hashtag, and keep your kids home from school as well if you have kids. This nonsense about schools being open, leave that for the genuinely essential workers, not the Scott Morrison, everyone's essential if you have a job school of thought. But I think that if we all work together, we can help get through this and keep watching the interesting things happening in the blockchain space. It's not a huge community here. I suspect I know a whole bunch of the people who are watching. And that's really positive in Australia. So make sure you look after each other during these tricky times, and working together, I think we'll go on and keep kicking goals into the future.
Absolutely. I think I'm going to do like a hash hour instead of happy hour. Weekly meetup. We can do like a Zoom call for up to, I guess, if we get up to 20, 50 people, we could still manage. We could try it out. Maybe next week I'll organize something, I'll put on Meetup. But thank you, Mike, for sharing all the research that you've done to go and speak to the Senate. I hope they heard you and they, you know, are ready to like get get to the community and ask the right questions to the right people. I think they started really well with you. Thank you. And we will talk to you guys next time. Thank you so much. Mike,
Excellent.
stay on the line because I just need to wrap up something with you. I will end the live stream here. Thanks everybody for watching. Please subscribe, tell your friends, and I will make the stream available shortly. Thank you.
Thank you so much, everyone. Thank you so much, Adriana.